Crypto markets are off to a slow start this week, with most majors dipping today as the market cools off considerably in anticipation of the upcoming CPI print and the Federal Reserve interest rate decision. Only 4 of the top 100 assets are up over 5%, showing how non-committal the market appears to be on the surface. Bitcoin hovers just below its all-time high, while majors Solana and Ethereum appear entirely flat. Following Bitcoin's sharp drop on Friday, where we recorded almost $400 million in liquidations, in the past 24 hours, nearly 40,000 positions were liquidated to the tune of almost $65 million in losses. Meanwhile, institutional inflows remain robust. Bitcoin ETF inflows recorded nearly $2 billion in inflows last week alone. On the other hand, Ethereum had only $70 million, which is still its best week since March. Now, I am leaning bullish with my trades this week, having just opened up a long position on Bitcoin. Bitcoin is currently printing a bullish 8 on my trade matrix, with the only negatives being on-chain and timing. I had to take the last couple of weeks off due to relocating my family back to the Midwest, and therefore I missed the entry signal that my system generated last week. However, with today's dip down close to the 21 daily exponential moving average, I feel this is a good risk to reward position. Now, I'm hearing a lot of chatter about how bullish the ETF inflows are and equal noise about how bearish the futures positioning is. So allow me to cut through all the BS and lay it straight for you. Yes, Bitcoin ETF inflows are robust and show that institutions are buying Bitcoin. A lot of it. And yes, CME positioning for leveraged funds is at a record low, which means, as we can see here, more shorts than ever, with rising open interest. However, the lion's share of that is just funds positioning to capture the basis trade. If you don't know what I mean, you can just take one for yourself. For example, anytime the funding rate on your favorite perpetual exchange is positive, longs are going to be paying shorts every 8 hours. If you buy $1,000 worth of spot Bitcoin and simultaneously go short $1,000 worth of contracts on your perpetual, hold that trade for 8 hours, receive a funding payment, and close the trade. Now, if we exclude fees and exchange price differences, your spot profit or loss should equal your futures profit or loss, and you are left with the funding payment as profit. Congratulations, you just captured and completed a basis trade. In other words, most of this volume is just funds taking advantage of a price difference between the Bitcoin ETF price and the CME futures price. Why so much volume all of a sudden? It's because many prime brokers, which are financial institutions that provide financing and other services to large funds or institutions, are now accepting Bitcoin ETF positions as collateral for leverage on futures positions. In other words, funds can buy up Bitcoin ETFs and use that position as leverage to buy up a bunch of short positions on futures. They capture the basis and they don't have to fork over any additional collateral. It's an easy win. Now, if you're trading with less than $10 million, basis trades will be a waste of your time. You need to actually trade in the right direction and make regular profits. But for these big players, their game is making money without taking risk. Now, all that said, positioning is net short amongst institutions, but it's hard for us to know how much of that is levered and to what degree. I would say the bias of institutions seems to be negative. In other words, they think that Bitcoin will decline, but honestly, they're usually wrong historically. Yeah, that's right. Check the data yourselves. The big boys aren't often right about the general direction of price, especially in times of consolidation. So the most important catalyst for Bitcoin's price movement right now, seeing as market data is essentially neutral, is macro. That's right. It all comes down to the Fed. Interest rate cuts, not going to happen this month. 99.4% consensus that rates remain right where they are. So what then? Well, it's CPI. As we can see here, the forecasted print is 3.74%, but I almost guarantee you that that will be lower due to all of the political pressure right now. There is egg on both Trump and Biden's face, and they're eager to keep the populace dazed and content. Never mind that prices have actually risen 20% while take-home pay is stagnated. Sadness. Now, we also do have some important earnings calls coming up this week from traditional finance like Broadcom, Oracle, and Adobe, to name a few. Expected to be positive, this positive news can, of course, lift investor spirits And that enthusiasm often spills over to cryptocurrency, especially from the tech sector. Now, I am expecting to see some dips in some major altcoins like Arbitrum, ApeCoin, and Aptos. There's nearly $210 million in token unlocks coming up this week. As we can see here, almost 100 million just for Aptos alone, almost 100 million or 90 million here from Arbitrum, and then ApeCoin is going to be unlocking almost $9 million as well. Well, darn, Justin, are there any other bearish things on the horizon? Absolutely, I'm glad you asked. Stablecoin minting has cooled considerably since the halving, one of the key indicators of future price growth. Also, the number of wallets with stablecoin holdings over $10 million has consistently been on the decline. These negative headwinds have made it difficult for Bitcoin to break out of its current range. But this week might just be the week. Don't take too much risk with your trades. Just position before the CPI print so you're not trying to get in during high volatility. Volatility is low right now, which is always the best time to position regardless of what direction that you want to trade in. You can always add to your position once it starts to move in your favor and your bias has been validated, which is a good opportunity for me to kind of make a public service announcement for trading. Crypto trading PSA. Never average into a losing position. Never add money to any trade that has lost you money or is currently losing you money. It's one of the cardinal sins of trading that we have traders tick off in our cardinal sins of trading checkbox for traders. Only ever add to a winning position. And that is when you're able to start doing that consistently. That, at least for me anyways, was a huge turning point in my trading when I actually really amped my profitability up to another level. It's scary when you're not profitable to think about adding to a winning position, because usually that's when you want to be clutching profits really too much early. You really want to let your winners run, and instead of taking profits, that's usually when you should be adding to a position when you would normally want to be taking profits. Other notables in the cryptocurrency markets this week? Well, yes, Base has now flipped optimism to become the second largest Ethereum layer 2 by TVL. I've been talking about Base for a long time. I actively predicted that Base would continue to grow and grow months and months ago, and I hope you guys have taken some advantage of that. Coinbase Smart Wallet launched last week, and they are featuring gasless transactions as on top of a bunch of other things. I highly recommend you guys go check it out. Even if you don't end up using it full time, it's very cool to try out, at least for its gasless transactions right now. And finally, you guys have probably heard about the meme coin trader UniCPS or Unisps, however you pronounce that. Trying to be the roaring kitty of crypto is basically kind of what everybody is saying. Not sure where I stand on it. Again, I think we have an individual that is standing by his positions, that is publicly posting his trades, and I think that is absolutely fantastic. It's really disheartening sometimes to see how kind of destructive the cryptocurrency community can be, especially on crypto Twitter, where of course things seem generally toxic. Like anytime, somebody, it just seems like a lot of people who try to stand on their principles or put themselves out there just really get shot down, unless they're part of the boys club. And yeah, that's not healthy for anybody. Again, not sure where I stand on it. Let me know what you guys think about UniCPS down in the comments down below. Looking at Bitcoin, let's do some technical analysis to give you guys my thoughts. Obviously, again, the Bitcoin long position that I took earlier scored an 8 out of 10. So let's just run through that real quick. As I said, we did miss the initiator signal that came in several weeks ago. On the 15th of May, when I was kind of busy relocating. As we can see on this daily candle that I have highlighted here, we see the TSI, which this is the public version of PTP that I have been trading for everybody, did cross and close above the signal line after a long period of consolidation, with the leading line being underneath the signal line, but we did cross and close above. Simultaneously, price did cross and close above the 55 daily exponential moving average as well, signaling that we are above the baseline and that bullish things might be coming. Of course, all of this, so both of those things, the fact that we closed above the baseline is 1. The fact that we closed above the initiator is 2 out of 10. We also have our confirmer here in the RSI on that same candle, not only trading above the signal line, but also in the bullish control zone above the 50th percentile. So that is 1 additional point. So that is 3. We also have the general direction of the trend over the last 3 months has been bullish. So that is positive. So that is the 4th piece of the puzzle. When we look at volatility at that point in time, we can also see that volatility was low or had been very low. So that's the last piece of the puzzle. The fundamentals, which account for 2 points in my 10-point matrix, are of course very bullish right now. The fundamentals for Bitcoin are very bullish. That does wax and wane. We got a point for confidence because I did feel confident about the position based on everything that I'm looking at. Now, the on-chain point was subtracted because the on-chain doesn't necessarily agree with what's going on. The on-chain, again, is very neutral right now and not biased bullish. Therefore, that point was detracted. We also, of course, lost a point for timing as well. Now, due to my general recommendations for trading a late signal, I've simply taken a smaller position size. And that's why, of course, here on Fairdesk, of course, we're only trading with a quarter of our account. And over here on ByBit, this is only a $14,000 position. You can see that really well. Let me move myself. A $14,000 position instead of the regular $30,000 to $50,000 position that we would normally take. Again, I will just simply add to my position if and when it does move in my favor. In addition to this, we also have equally bullish signals on the 2-day chart as well. Bitcoin's price bouncing cleanly off of the 55 daily exponential moving average baseline here on its recent dip and rebounding, now trading nicely above that and above the 21 DMA as well. TSI similarly did cross and close above the signal line. RSI does remain in the bullish control zone. And as we can see here on the 2-day chart, volatility is now printing a flashing blue signal, which means volatility is very low, meaning we are about to have a big movement in one of the two directions. Volatility is directionally neutral, but all we know is that positioning when volatility is low is one of the best things that you can do to ensure trade success, or at least big movements. You still have to pick the right direction. Similarly, on the 3-day, we haven't crossed over yet. We are not yet bullish on the 3-day, but we are very close. As you can see here, TSI is threatening to cross over with a nice bullish close anytime now. RSI has crossed and closed above the signal line and is trading in the bullish control zone. And we can see here that volatility has now dipped down to a record low, not record low, but very, very low level. 5-day as well has not crossed over yet, but we are still trading above all major moving averages. RSI is in the bullish control zone, has recently crossed and closed. Volatility is still low, quite low here on the 5-day as well. And on the weekly time frame, of course, we have not gotten the weekly signal yet. As we know, we trade the daily in anticipation of the weekly. Usually when the weekly signals come, they're just a little too late, but we do take those because they're long term. Volatility on the weekly time frame is, of course, very low. RSI in the bullish control zone, but underneath the signal line. So the 1, 2, and 3-day are quite bullish. The 5-day and the 7-day are about to flip over, are very close to flipping over. But the key factor amongst all these charts, of course, ladies and gentlemen, is that volatility is very low, and now is the right time to position, trade the direction of your bias. Anyways, it is so good to be back. You are going to be seeing much more activity, analysis, and trades from me and the team here at Kraken Crypto. By the way, we are launching our new and improved Crypto Trading Academy in 2 weeks. Get on the wait list for early bird discounts, early access. We'll also, over the next 2 weeks, be giving away lots of free stuff. Free annual seats, private mentoring lessons, one-on-one mentoring lessons, discounted access, and much more. The link is down in the description to get on the wait list. I highly recommend that you guys do that. We will also be launching a trading competition for our subscribers on Fairdesk as well within this week. So look forward to that as well. I wish you guys all the best. As always, emotional discipline and risk management are what pay the bills around this house. That should be around your house as well. Trade safely, and I'll see you guys in the next one.